Hello, good evening. This is a short video that I'm going to call Random Thoughts. Um, Today, I was just thinking in the afternoon. Usually, what happens is when the markets are low, you take time to actually review, look at the charts, see what's going to happen the following week. And as I was looking at the charts, it just occurred to me that there is an easier way of actually understanding, the connection between chart patterns and support and resistance. So I will quickly jump into the charts and I'll share my thought on just the connection, which can help you a lot in planning your trades. So this is your typical, chart. So what I will do is I'll look at this uh, left-hand side. In fact, I think I'll just make it bigger. All right. So here is what we have. Now, if this is a 4-hour chart, on over the weekend you try and use the bigger time frame to do your planning. So you mark your support and resistance, especially on the bigger time frame, so that during the week I then pretty much do my trades between the big support and resistance points. So if you look at the daily or the 4-hour, I normally use the daily over the weekend just to kind of have an idea of what will be happening. But then as the week goes, I come down to a smaller time frame to trade what I thought I saw. All right, so this is the daily chart for. I just picked up a random currency, in this case, GBP USD. So for GBP USD, this is what we have. And if I was to now mark the chart the way I normally do, again, I randomly, not randomly, but actually mark the highs and the lows, all right? Because that's where your play will be taking place. So I go to my marker and mark the last high we had there, okay? Not on the wick, on the body. And then I come down and mark the last low that was there. And then to the extent possible, I keep marking without making the chart very dirty. Okay? So then the next low that I have on the left hand side is actually that one. Okay, if I look at the highs, the next high that I can say, there's what we call significant and then minor. So we can say this was a significant turn. Okay, whatever strikes you the first time around. So I can take this or I can take this. All right, for now I'll take that. Okay, the significant turning point. I think somewhere around here is a significant turning point. Okay, then another one here. Maybe, and these are zones. Please remember they are zones, so don't treat them so much like a line. Okay, the market is bound to turn around that zone. So I think I can leave it at this. This is already too colored, but it helps me in visualizing, my trades. So then I go to a lower time frame, okay, and look for the opportunities. You know, so what I would do then, I would either, for the longer trades, I would go to the 4-hour and see if there will be something, to do. So I'm going to leave it at that with the charts. But what came to mind today, it just hit me that wait a minute, we're going to talk about, you know, the chart patterns, and there are very many chart patterns. So if you look at the charts, what kind of chart patterns are you likely to see, or are you likely to, experience during this time? Okay, during the market movements with these ups and downs. Now that we know the turning points and all those things, well, Obviously, your guess as good as mine. The chart patterns will actually occur in between this support and the resistance. All right. So because the market is, let's say, at the bottom here, we can say that at the bottom and at the top, we might expect to see chart patterns that actually change the trend. Okay. And what are those? They're called reversal patterns. So there might be reversal patterns around here. Okay, might be reversal patterns at the bottom there too. There might be reversal pattern there. Anytime we have a significant turn, there might be a reversal pattern there, over there, over there. And what are the reversal patterns? The reversal patterns, like we have mentioned before, are the double tops, the triple tops. I will show you in our cheat sheet that we have shared before, which I'll also share with this video. Okay, so really, it's up to you to look at the charts to see and identify these reversal patterns when they are forming. When they are forming, so you look for them around the significant areas, reversal patterns. All right. Now, what about in between? In between the support resistance, what are you likely to see there? Well, your guess is as good as mine. You're going to probably see a lot of continuation patterns where there's a pattern that is being formed, but basically it shows continuation. It is the market is continuing. It is not reversing or anything. Continuation. But the continuation patterns are very many. They come in form of breakouts. You see all these triangles that we form. We always write, okay, because the market is coming, okay, and then it bounces around there for a while and then continues breakout, okay, or the triangular patterns, which we call like ascending triangle or descending triangle, something like that, and then it goes like that. And similarly, if it was a descending triangle, be something like this. Okay, so the market would come, okay, and then continues, right? So those are continuation patterns. Of course, there are very many others, but where are you likely to find them? Like I said, you know, in between, in between, okay, between, and there's several. There are so many. If you just look, you will see them. There are very many. They come in form of rectangles, in form of triangles, etc. So, in summary, what am I saying? The significance of the chart patterns can visually almost be seen if you look at your charts. But where do you look? Well, you look at support and resistance, support and resistance zones. So if you're looking at support and resistance zones, you know that when it's up and the market, you're expecting the market to turn, actually, then you're likely to see reversal patterns. So you start looking for reversal patterns. You start looking for double tops. You start looking for triple tops. And if the market is between, like a top and a low, in between, you can look for continuation patterns, which happen all the time. Okay, I hope I have made my point very soft or very simple and short, simple and clear. All right, so let me show you some of the patterns, and I'm going to share the cheat sheet with you. So we get out of this. All right, and then I'm going to share the patterns. Oops, sharing the wrong one here. I need to share the photo. Okay, I think we are having there. Okay, here it is. All right. So, like I said, this is just a photo of our chart patterns, the way I have explained them to you. So, again, like I said, if you're thinking of the market being at the top or at the bottom, chances are it's going to reverse. If it's going to reverse, what are you going to be looking for? You're going to be looking for any of these patterns so you can trade them. Okay. I always say you don't have to memorize them, but you can have a look and have an idea. You can actually uh, reason your way out. So when the market seems to be going up near a particular resistance point, well, then that's what you do. You come and you look at your chart patterns, and your chart patterns will give you what to look for. So you're going to be expecting a reversal pattern either at the top or at the bottom. And which are the patterns you're going to be looking out for? You're going to be looking out for these ones here. Going to make this a little smaller. Okay, these are your options. So at the bottom, at the support zone or a resistance zone, you'll be looking for either a double top, okay, or a double bottom. Okay, why? Because it comes and this is where it makes a turns around, okay, or a head and shoulder, which means it comes up, hits a point there, comes down, up again, down, up again, then reverses. Okay, so it's a head and shoulder, and then an inverse head and shoulder when it's at the bottom, and then a rising wedge and a falling wedge. So as you can see, this is a rising wedge. So this wedge appears to be going up, but actually it's preparing to turn around. So it goes up and then comes down. Similarly, a falling wedge will go down and then come up. So reversal patterns, look for them when the markets are about to reverse. And where is that? Usually at the support and at the resistance. Okay, in between support and resistance. Look for those ones. Now, what about the other patterns? Well, in between have what we call continuation patterns. And like I said, these are patterns that form. If you look at your charts again, they normally form when the market is not about to reverse. The market is going up, down, and then it looks like it wants to reverse. Okay, but it doesn't reverse, it still continues up. Okay, which means it gives you a chance for like a breakout or whatever it is. But these are some of the continuation patterns. So we have what we call a falling wedge, where the market goes and looks like it's falling, 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 and then turns around, goes up, continues. Okay, then you get the, of course, the bullish rectangle. Oh wait, the falling wedge, the opposite of that is the rising wedge, which the market comes down and looks like it's coming up, coming up, coming up, but becoming narrow, 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 and then goes down. Okay, so it is just continuing down. Then there's of course the bullish rectangle, and that forms usually in the form of a channel, forms a channel. So the market comes, plays in the channel, and then breaks up. Right? The same thing if it's going down, if it's bearish. It comes, enters into a channel a little bit, and then breaks out. That's this is what I've been saying for our sniper traders. This is where they're making their money. In the bullish rectangle, or bearish rectangles. Okay. Eventually, I'll also teach them how to watch for the falling wedge and the rising wedge. Then there's the pennants. The pennants are like flags. The only difference is they are continuation patterns. They come, consolidate, forming a wedge, and continue up. Okay? Pretty similar to like a falling wedge here, right? Very, very similar. And then this one, a bearish pennant, the same thing in the opposite direction. Comes down and then narrows and then finally goes down. So that is continuation patterns. And where are you likely to find continuation patterns? Like I said, in between support and resistance. You know, when a chart is consolidating, usually when they start consolidation, you ask yourself, what is the market doing now? What is it trying to form? If it's between support and resistance, chances are it's going to be one of these things. Okay, one of the continuation patterns. Well, but if the market is turning down, turning around, then of course you know what kind of pattern it will form. Maybe a triangle, a rectangle, or a reversal. All right, and the last one, which is just an extension of this one, is what we call the bilateral patterns. These are the ones that you kind of don't know where they're going to go. So then what do you do? How do you trade them? Well, you put both buy and sell. Okay. And again, this is the sniper trading technique. All right. So we find that here the market, you don't know for sure whether it's going to go up or down. So for that reason, we have them, we call them bilateral patterns, ascending triangle, which can go either up or down, or a descending triangle, which can either go up or down, and then a symmetrical triangle, okay, can either go up or down. So there you are, ladies and gentlemen. That is just my random thought today as I thought about the charts and the patterns and the connection. So when you look at the charts, look out for those turning points or continuation. And suddenly your chart patterns will all come to life. All right, I'll leave it at that. And if you have any questions, you know how to get hold of me. Thank you.